With that, let's go ahead and hop in to the S&Ps. So this is our both weekly and daily cycle analysis for the S&P 500, clearly in that intermediate term rising phase. This was even on the weekly chart. This was your higher low setup. This was that huge day we had. This was the higher low setup that then created the opportunity even on the weekly. Jump over to the daily chart. Here you go, right? Sharp sell down. This is your higher low. RS turned positive here, and then you cleared that high. As soon as you started clearing that high, right around that 424, 425 time period, you should be thinking, okay, there is, a trough that has very likely formed. I know where I'm wrong now. Let's find out what is actually basing during this time, right? 424, 425. Go back to GEV. This was one of our longs, right on 430, right off of that low. This is your base in terms of price. Just hide the drawings. This is your base in terms of price. I want you to just hone in and really get great at seeing bases in terms of price. I'm not talking about anything else, just a base in terms of price. That was it right here. Here's your flag opportunity. This was your low risk entry spot, and then you can see what this has done. You will obviously not know what can happen, right? But part of being good at trading is just simply to put the odds in your favor. How do you do that? You wait for the right opportunity to buy, and you have to buy or sell correctly. Obviously, you would only be selling on the downside if you were looking to actually short. But in this case, you would have to be buying correctly, and that means buying and seeing clear feedback in your direction, right? Go back to some of the other leaders during this time frame. Netflix, hide the drawings. I just want you to see the base. This is the base right here. This is your base. This is the opportunity set that happened. There were opportunities along the way, with these flags, so on and so forth that happened. But this is your base in price. Go to PLTR. I want you to see some of these leaders. Hide the drawings. This is your base. I highlighted it in blue already. You can see it. This is your base. This is your breakout. This is your reason to be involved, and you can see what it did. Go to Hood. We did this for a trade idea. This is your base. Get really good at seeing these bases. If you do, it will pay handsomely for you. This is it right there. That's your base. And then what happened after that? We rode our trends higher, right? What happened after that? Well, you can see what happened in the semis. Right there. This is your base in price turned up, and this is where the semis really started to get going, right around that 6-2 time period. Off of, again, what is this? This is a little consolidation in the SMH above the 200-day. That was your little opportunity to be involved. Where? Right as you move through that high. And there you go. No risk. It just continued to go up. And why do I say no risk? I'm saying on that opportunity, you didn't take heat. That is your sign that you have actually bought correctly, right? And so then what happened of late, right? Well, we did the long and toll. Let's see toll. So when did this really break? First, I want you to see this base. Look at this massive base. Look at that, okay? So this is it right here. So we got involved right here, right there, right at around that 626, 627 time period. And look what happened. It turned up, it's flagging, and it's turning up again, going right towards the 200. That's all I would be looking for now, until it can actually get over and actually consolidate above the 200. If it can do that, then this will likely still have more legs. But this is what's happening. That's that long base that's happening there in TOL. Okay, and you can see our actual trade idea right there, just for anyone who was not able to see it, right? So that's the opportunity set that has just shown up in names like TOL. Now look at what I'm seeing in LPX. Weekly chart. Low that formed a little higher low and starting to turn back up. Why does this look interesting? Well, you now have a higher low on the weekly chart, and you have cleared that old high. That's really interesting to me. And we have that sharp sell, okay? Go to the daily chart. This is your W bottom. This is your base. You're now clearing it. Let's see what happens towards the end of day. But right now we're seeing a shift to the upside in the indicators. Given that we have very likely just formed a key weekly low, this move should have some, again, duration on the move to the upside. You see what I'm saying? So hopefully this is all making a lot of sense, but I'm looking for this to continue on the upside. How long is this daily cycle? Let's take a look at it. Right around 50 bars, right? Over 2 months. So this move is likely just getting underway. So then it's all about figuring out actually using your entry tactics to get involved here. How do you then have your risk? How do you actually manage that trade? All of that are things that have to be really honed and really isolated and followed, obviously, to the T, right? So hopefully it's helpful to see this, but just wanted to highlight, what has happened so far, because this is just a great time period for those who are new or those who are just trying to figure out all this out, to learn about, first, how lows form, how to use cycles to help you, not to make things more confusing, but to help you to understand both duration and magnitude of moves. When you could be looking for stronger moves in a certain direction versus when you're seeing highs form. Look at this high in LPX. What happened here? It made a lower high. And then what happened after that? Zoom in. Where were we on the weekly? We were in that rising mode. We saw a sell-off. We saw this form the lower high. And then look at the indicators on the shorter time frames, right? The RS turned down. You then started to curl it your way back down. The trend turned red again. And look what that indicated. It indicated on the intermediate term, you're in a corrective mode. So that says you should only be looking on the short side. And in terms of how I like to trade, I like to actually be shorting back into the falling ribbon as long as it's in parallel. That's these setups right here, all of which gave you opportunities, right? Flags back into the ribbon, holding the falling 21. This is just a random name that we are looking at, but look at how the same concepts that we highlight play out. Again, all of these are actually giving us things that we can learn if our mind is open to learning about how really underlying trade. That's what it's all about. As you can hear, this is something I feel like is a huge learning opportunity for all of us. Okay, and everyone, doesn't matter how long you've been trading, you have to keep learning and keep getting better, because as we've seen, if you can really figure this out, you can do very well, extremely well over time, if you literally take every single day as an opportunity to find a way to get a little bit better at something that you do in your life. Every single day, you have to try to find something to improve upon in your life. If you do that, then over 5, over 10, over 15 years, you will see huge growth. Okay, so that is what really how I'm thinking about everything. So that is our look there at LPX. Jump over to the Qs. This one formed its low, sharp down, again, equally sharp back up into new high ground on the intermediate term. On the short term, series of higher highs, higher lows, trough that is due 711 to right on 721. There's a zone from right on 552 to 542. Again, that rising trend is likely to continue to hold until you see a first loss of that rising 21, which we have not seen on this whole move up. and then you'd have to lose the 61.8, 78.6, correct? So that's at 536.30, 530.63. Let me go back to the S&Ps. The areas on the upside, 629 to 639. Our fibs are right here. 61.8 at 605.50, 78.6 at 599 quarter, 21 EMA right at around 611. It's only if we can close below first that that daily 21 does it open the door to some lower levels, right? But right now, we're just in a grind mode up. Small bodies on the upside. These, this can really go on for longer than most would think. But it's going to be, under the hood, like what we're seeing, money rotating. So we haven't done anything over the past week in the S&Ps, but look at what's happening in the RUT or in the IWMs. New highs, right? New high ground. Look at what's happening in the MDYs. New high ground. So these are the indexes that are leading to the upside. Again, long cycles, 50 plus bars. We're very early into this. This can continue for a little while longer. So we're going to be aware of that. I have been saying, and I still believe, that we're going to rally up towards that 78.6. Once we get there, I'm going to be watching closely. Does it actually stall out around that area? But in the interim, until we hit that, and I'm seeing stuff like this in TOL, right? Like this in LPX. I'm gonna still be looking to the long side until these setups start to fail, right? As traders, we have to keep doing what is working until it stops working. We have to keep doing what we do until it stops working. What does that mean? We have to keep seeing higher low, higher lows form and actual price bases that form, and literally keep taking them, right, until they stop paying, until you stop seeing follow through out of the bases. That's what we have to do. It doesn't matter that we have runaways here, because look at what's happening in the RUT. We are still actually retracing that move that started post the quote unquote tariff tantrum, but that seems to be ongoing. We are still retracing that. So as long as that's happening, there's still energy in the market. So that's what everyone's seeing. That's what everyone's doing. So, there's no way that we can really say anything else about this. Could this here in the MDY move over the 78.6? Sure it could. You can move up like that and roll down. You can move up towards the old high and move down. Follow that translation. We're still early on the We're still early on the intermediate term in the MDY. This can continue for a while. I'm going to be watching closely how it acts around that 78.6 in the MDY, no doubt. But there are still some opportunities. Is it as I'm going to say easy as it was earlier in this cycle? No, because the overall opportunity set is getting a little bit more narrow, right? It's getting a little bit more narrow. There aren't as many sectors left in terms of that net, net watch list that I can generate of clear opportunities. That is getting narrower and narrower as the move continues. That's natural. Earlier in the move, there will be the most opportunities. Just hide the drawings for a second. Earlier in the move, like from here until here, there were tons of opportunities that were setting up. Now, as we are getting out here, there are fewer opportunities. And that makes sense because most of the really, solid setups have left the barn. They have moved on. They have moved. They are gone. So there are fewer of them now, but there aren't none. There are still some. So when they're there, I am going to be really keying in on trading those. Okay, so I'm hoping that this is helpful, because we have to really put context around everything that we do, and it needs to be really clear and very consistent in terms of what we do, right? I'm not someone who is going to go and all of a sudden, trade these really huge high flying names. That's not the way that I like to trade based on my overall personality, right? I like to trade clear moves that move up, that trade a little bit sideways for a little, then turn up, that trade sideways for a little and turn up. I'm not going to be trading the names that go like that and then go like that, like that. I'm not trading those names. I'm trading the names that are kind of going up in a more even fashion to the upside. That's what I like to trade. Other folks like trading other kind of things. Some of us like to trade on lows all the time and are only trading stuff on lows until it actually forms lows. There are so many different ways to trade, but I think it is it is helpful to understand how I like to trade, and that's just my overall style. Okay, so with that, I would say super long intro. Let's now hop into some of your charts. DOCS, Doximity Corp. So here on the intermediate term, we had a low that formed a little bit of a base here, but acting, I would say, quite weak relative to the overall market right now. 62.32 to 71 are the levels. On the daily chart, I want you to see a little base potential here. But what are we doing? We're actually re-entering it. So not great action short term. You really want to see that turn up and then really follow through. It hasn't, so giving us a little bit of caution. 21 EMA at about 59.50. If it loses this low at 57, that would be a warning sign. Low that's due 731 to 813. Jump over to TJX. TJX I actually have on the radar to the short side. Why am I saying that? Well, we have the RS being down. We have a clear failure, which I think actually happened on earnings. I'll check. And now I'm going to actually be watching for this to roll down like that one more time. And so it hasn't yet set up, but it is on radar. 825 to 1027 or so is when that low is due, short term. Yeah, so this was that move on earnings, and then you can see it hasn't looked back. So this is in my view right now, very likely a peak that has formed here in TJX. Now the overall cycle structure, this should be red, is positive, but if we fail in this zone from the 38.2 to the 61.8, right, that would be usually how this would form that lower high. You'd have this rally a bit, form the lower high, and then start rolling down. So you would see the RS on the daily chart. Just kind of visualize that turning up, and then you can visualize once the RS can turn red again and then hold red. Once that happens and holds red, that's when I think you would have really an opportunity to be looking short. And what is the overall context of that? It's that you're in, therefore, the corrective period on the intermediate term, where you can look for some selling into this zone from 121 to 117. Okay, so that's how I like to think about it. This is in the short term in a rising phase. If you hide the drawing, there's a little a little price base that's trying to form here. So my view on this is that it's actually going to actually form a higher low and then turn up and move to higher highs, just in a slightly higher high. Obviously lower than that, but watch for that rally and then for this to curl down after that. So that's what I have on the radar for TJX. Jump over to ROST, ROST. On the intermediate term, same overall picture. I'm going to be watching for this to be a bear flag, but clearly weaker, right? Look at this. Hide the drawings for a second. Clearly weaker. This is showing you a rounded peak on the intermediate term, very similar to that, really, very similar, actually, just longer, frankly. So be aware of these things. This is not really a good picture. I've actually highlighted this on the short side previously, and there's a zone 9120 right around 11.3. Okay, short term, a low that it was due. We are trying to form a bit of a higher low, and then again, I will be watching for this to fail. But is there any obvious opportunity yet? Not quite yet. I want to see this try for really one more move back to the upside and then start to roll back down. Given that this is a lower low, it would not be unreasonable to see a move back to that 124 half area into that trough, which is due in around that 820. Okay. Jump over to Amazon. Amazon is holding right below the 78.6. The longer it holds sideways, it'll look more like this to me, right? If it can hold sideways and hold closely, just underneath that 78.6, then I'll be looking for it to actually move up. If it fails and it, rolls down like that, then that would be looking like a peak, of course, right? So this is a key area to watch closely at right around that 226. A drop is due towards the later part of fall. Short term, 722 to 84. Holding in, RS is positive, Slim Ribbon's positive. So that short-term bias right now is positive, albeit not doing a whole lot in terms of any kind of leadership. It's really just holding sideways. 224 to 229 are the levels up. Jump over to CIBR. Okay, this is CIBR. CIBR formed that low as obviously one of the leaders off of the lows, with CrowdStrike being the actual leader in the group, acting and really acted great off of the same low that formed here in the CIBR sector ETF. 7642 is the 100 and 127.2 at 82.23. Short term, going to be keeping an eye on this 61.8 at 73.36, 78.6 at 72.55. If it loses those two levels, then this old low would be on radar at about 71.50. 8.11 or so is when that low is due, and you can see our levels up 76.5 to 77.80. So that one has seen a solid run, and obviously, the overall bias is up, but I think there are more interesting setups elsewhere. Jump over to CCJ, same kind of thing here in CCJ. This one had its run. I think it needs a little bit of a pause. Would be great to see it move back down to that 62-ish to 65 area. I don't know if that's what's going to happen. We'll see. But 8.11 to 9.29 is when that low is due. RS on the daily charts just curling, but we have not had a close below the rising 21. That has to happen first. If that can happen, then be looking for a series of lower highs and lower lows, and for us to kind of roll its way down a little bit into this trough 731 to right on 821, which is on the early part of when that low on the weekly was due. So just keep your eyes on this. But you can see, if you hide the drawings for a second, this has tried to rally right here, and then it failed the following day. So giving some early signs of stalling a little bit here in CCJ. Also want to highlight, we have 1, 2, 3 unfilled gaps in CCJ. So I think this has run a ways and needs to consolidate. That's just my view. Jump over to CC. So this is CC. Very interesting. This is exactly what we are seeing, right, in terms of what has been leading of late, right? Obviously, long term in a downtrend, but a little base. Here is your base on the weekly. If you just follow the RS, you can see it forming the base, right? So that can help you follow what is happening in the RS to help you to see that actual base and price. And we're just getting into a new rise. 1576 to 1732 are the levels. These are longer cycle brackets that I have on the chart, right around 38 bars. It's been fairly solid for a long period of time, going all the way back to 2018. So that's kind of what we're looking at right now. On the short term, 71781, again, the RS is positive, slim ribbon is positive. So the overall, look here would be for a test of the 38.2 to 61.8, 1313 to right around 1219. Jump over to the next one. We'll look at INDA. INDA has not been doing anything of late, which is okay. It's going to happen. There's a low that is due right around the later part of August. Right now, this is still looking like a flag, but if it gets too far into this bar, meaning it starts to look back towards the lower end, down in the low 54s, that would likely indicate that you are seeing a high forming at this point on the intermediate term cycle. Short term, you can see it isn't doing anything wrong yet. Not unreasonable. This has happened, of course, where it just sort of chops around, then finally turns up. It's just chopping around. It's still possible that it turns up. There's a trough that is due right about now. You can see we have a trade idea actually in this name. Has not been really on my radar because it just isn't doing anything yet. But that's just how this trades sometimes. There are times when it is doing that, and there are times when it is doing this, just trading back and forth. So you have to watch it, and you can see what we are looking for on the upside. But keep your eyes on this. You do want to see it hold somewhere around that 55.50 to right around 54.90ish area. If it can't, that would be a bit of a warning. Jump over to coin. Coin has been an absolute monster on the upside. There's a trough here that's due 714 to 91. I'll just hide the drawings for a second. You can see how powerful this is. Go way back. This is the old IPO, right? We're building a massive looking base here in coin. Absolutely massive. This is what I think is showing you what is possible in coin, right? While this has had a huge run, we are just really working our way back to where we actually IPO'd back there. Okay, so just critical to understand this longer time frame and what is really going on here. 714 to 91 is when that low is due. There's a fib up here around 407. You can see what I'm looking for, just a little higher, small dip, and then higher again. Short term, 718 to 730 is when that low is due. The RS is positive, slim ribbon is positive. So under this overall setup, usually we would only be looking at flags back into the rising ribbon, 361 to 330, let's just say, to then yield still higher prices. But the only actual setup which we did highlight on the Trade Ideas feed was back here off of that clear breakout from the trend. And once you clear that high, that is your base in price, right? Here is your actual first base right here. This is your base, right? And then you saw a gap and consolidation. Again, we always are trying to highlight signal from the noise, right? This is your signal. This is what's really happening, because that can help you, because it can say, okay, well, when should I be involved? And this was on news, but still, right? It was there. It didn't, move up, and it didn't have a move like that and then just actually gap. It actually traded through those key areas. So what I like to do is look and see, am I able to see a little shelf form? And in this case, there was one right around there versus that high at 265.65. So what I do is I am going to set a price alert as we get towards that key breakout area, in case I'm not seeing it and I'm not watching it at the time. So I can, go back to the symbol and then create a buy stop order here versus here. So that would be right there versus that higher low. You see that right there? It's right about, 19-ish points. That is what I like to do. So if it's going to work, I want to be in pre-actual breakout. Again, that is just my own entry tactic, right? Is to try to find a shelf that forms pre-breakout. And then, not have to actually be involved at the breakout. I like to try to be involved a little bit prior. If I can see a shelf form like this, you can see there are, 3 equal highs. That's your shelf basically. And then I'll actually buy through there versus a little higher low opportunity right there. That's what I would do. And you see what happens. Okay. So that's the setup in coin. You can go back to the trade ideas feed and see what we were seeing at the time as well, if you'd like. Okay, so that's the setup there in coin. Very, very nice opportunity there. That's set up very cleanly as well. At this point, I say all that simply to say this is less of a clean opportunity right now because this move is already well underway. And now it's more of trying to see if there are flags, and there may end up being one. Sorry, right around this earnings. We'll have to just keep our eyes on that. All right, just keep moving here. Jump over to HIMS. HIMS has a low that's due 721 to 91. This is still looking like an unfilled gap and a bear flag for one more test down. This was actually one of the leaders off the low that unfortunately failed, but you can see where it failed. It failed right around that 78.6. Short term, 625 to 710 is when that low is due. Now that we have seen a failure and a lower low, right? That's kind of shifting the overall trend back down, or more so the overall cycle structure, which is kind of a function, as I said earlier, of an intermediate term trend, right? It's actually starting to have it roll down. 51 quarter to 57.36. Drop is due right around 812. So that's the look there at HIMS. Jump over to Tesla. This is Tesla. There's a low that is due here, 9.1 to 10.27 in a clear corrective mode. Obviously, we have earnings coming up here. Anything can happen on earnings, as we all know. Short term, however, this is your move towards the 78.6. This is your first opportunity to be short here. This is now, I think, your second opportunity to be short here, as it is moving back into the falling ribbon, which is only just now set up bearishly, but this is certainly an opportunity to be looking short. And if you look at your fibs here, if this started to move back through that area here, right on 323, then that would say, okay, this is probably not going to play out. But as of right now, a move into the zone 305 to right on 314 or so is likely to fail for a move back down towards the sold low at 288.77 to 273.21. All right, so that's a look there at Tesla. Jump over to Lulu. Now, Lulu, I think, is a little challenging here. Now, on the intermediate term, not much has changed. Formed a low, got the rally, then formed a peak, sold off. Trough that's not due until later in the year. But on the short term, getting a little harder, right? Large sell-off, forming what looks to be a bear flag, but the RS is positive. So that RS needs to turn back to the downside here to actually say that this is a bear flag. That is really very important. You need to see it turn down. So that's still really on radar right now. 716 to 729 is when that low is due. Jump over to UNH. UNH, just has not done a whole lot. Been trading sideways after that news, and not seeing much to say here. A trough that's due out towards the later part of the year still. Short term. See if I can get this unskewed a little bit. There's a low that is due out here around the end of the month. Looks like there's also earnings coming up there. 297 to 278. Is there any obvious edge here? Not for me. There isn't anything happening. We're just trading sideways in what looks like a very noisy range from like here to here, right? Basically. So we're not doing a whole lot here in UNH, even though we see so much news on a daily basis there. The actual underlying is not really doing anything. Jump over to IonQ. 714 to 91 is when that low is due. So the overall pattern is actually, I would say, very positive right now. We see these highs that are forming right around there, right about that 4870 area. Are we able to move through that right now or not? If not, and we see a little flag form, that may actually build the energy here for a breakout higher. 714 to 91 is when that low is due. Short term, 717 to 729 is when that low is due. 4413 to 4181. This old high is at 4885. So I think pretty well here with IonQ. 717 to 728 is when that daily trough is due. Not much to really say on that one, but overall looking good for now. Jump over to AMT, one of the former darlings of the market back in the 2010s. I remember, if you go way back here, this was a stock that everyone owned and had to own. Look at this period here, just in that really nice uptrend on a monthly basis, but just worked its way up from, I remember this so vividly. Owned it a few times during this period, but 30 something all the way up to 300, and this has had splits along the way. So just absolutely amazing. Where was it splitting? I thought it split here. Maybe it didn't split. In any event, this is AMT. Short term, there was intermediate term, there's a trough through 1230 right on 47, holding sideways 78.6 at about 229. Don't really see a ton here right now. Is there any obvious edge right now in terms of the core pattern? Not for me, there isn't. Again, off of the low, there would have been. I did not trade this thing, but this was your higher low setup on the weekly, would have shown up on the daily, right? And why was that interesting? Because it was sharp down, higher low. That's what you should be thinking. Sharp down, higher low, opportunity for a full retrace. That's exactly what you got, right? Those are those high probability setups. You see that all the time. Daily, okay, sharp sell. Look at how this showed up. Hide the drawings for a second. Sharp sell, little look under and fail there. Put in the higher low here. This is your base, therefore, right? And here's your breakout opportunity post earnings for the full retrace, right? So that's the setup, right? That's the setup here off of that low. That would, to me, was the only setup I would have actually done here in AMT as I look at this chart, right? So right now, we're just really chopping around here. Not a whole lot to be said. 226 is a 78.6. Finally, we'll look at the Nifty 50, then call it a day here. Weekly chart on the Nifty in an intermediate term rising mode. A trough is due right around the later part of fall. It says the ideal trough is around 929. RS is still positive, so it's saying you're still in that rising phase until that actually turns negative, and it has yet to do so. 26,277. On the daily chart, there's a daily trough that formed right on time. Now we are kind of really stalling out a little bit. There is a mid-cycle low due somewhere around the 722 time period. Are we selling off into that? Certainly possible. But on that sell-off, you do not want to see it lose the 61.8 at 24,930. If it does that, that would be negative. Ideally, you hold somewhere around the 38.2 to the 50, 25.2 to right on, let's just say 25,100 or so, somewhere around there. And then you want to see another move back up to higher highs. If it loses the 61.8, there is an increased likelihood that you're seeing a failure in the pattern. And again, that next trough is due right around 9/1, which would be in line with the weekly timing as well. So getting into in an overall time frame where we should be really thinking about both sides, especially at this point. Obviously, we are always thinking about both sides of the trade, but in this case, right, actually to be saying, well, what would have me be short on the Nifty 50 is if we saw a sharper sell in this minor corrective period through that 61.8, then I would be looking at this as a higher odds failure setup for a move like that into the end of August, early part of September. Okay, guys, that's a look at office hours. It was almost 1 hour long. I do hope that it was helpful to you. Please let me know. Thanks again, and have a good day.